Welcome to Invest and Prosper, your number one tool to help you achieve your journey towards financial freedom.
Hey everyone! Welcome back to Invest and Prosper. In today's video, we're diving into the exciting yet high-risk world of low-float stocks. These are the stocks that can skyrocket hundreds or even thousands of % in a single day. If you've ever heard of people making huge gains fast, it's often thanks to low-float stocks. But remember, with massive profits come massive risks. Let's explore this roller coaster together. To start, let's look at some examples of low-float stocks that have made massive moves in a single day. Take a look at these stocks. In August of 2024, Regencell Bioscience surged over 900% in just one trading session. Imagine buying at $3 in the morning and watching it skyrocket to over $30 by the end of the trading day. Insane, right? Then we have MRIN Software in 2022, which exploded well over 1,000% in less than a week. This one went from $10 or so to over $160 in just a few days' time. Finally, the largest percent gain that I personally witnessed and benefited tremendously from trading involved a new emerging wheat stock called TLRY. This stock saw gains of over 1,400% back in 2018. At the time it was trading around $20 to $25 and then shot up to over $300 over the course of 1 month. A single $1,000 investment would have resulted in a total profit of over $14,000. These kinds of moves are why people get so hyped about low-float stocks. But let's break down the underlying mechanics of what exactly makes these stocks so explosive. So, what exactly is float? In the simplest terms, the float is the number of shares available for the public to trade. We calculate it by taking the total outstanding shares and subtracting shares held by insiders, institutions, or anyone unlikely to sell in the short term. For example, if a company has 1 million outstanding shares, with institutions holding 400,000 shares and insiders holding another 200,000 shares, only 400,000 shares are left for the public to trade. That means the float of this stock would be 400,000 shares. Now that we understand float, let's talk about what makes a stock low float. Typically, traders consider a stock to have a low float if fewer than 25 million shares are available for trading. To put that in perspective, Tesla has 3.2 billion outstanding shares, with a float of 2.8 billion available to the public. Low-float stocks, by comparison, have a fraction of that availability, making them more prone to sharp price swings when demand spikes. This limited availability is what sets low-float stocks apart, creating unique opportunities for high returns and equally high risks. So now that we know what low-float stocks are, let's talk about how to identify them. One popular website for traders is Yahoo Finance, where you can search for individual stock tickers and get detailed information on each. For example, if we search for a popular company like Amazon on Yahoo Finance, we can go to the Statistics tab. Scrolling down, you'll find both the total outstanding shares and the float. In Amazon's case, the total number of shares, known as outstanding shares, is 10.5 billion, with a float of 9.36 billion, representing the number of shares available for retail investors to trade. This makes it an extremely high-float stock, with plenty of shares in circulation. Now, for comparison, let's look at a low-float stock we mentioned earlier, Regencell Bioscience. Regencell only has a float of 1.46 million shares. This is orders of magnitude smaller than Amazon, and well under the 25 million cutoff typically used to define low-float stocks. With fewer shares available, stocks like Regencell are far more likely to see significant price movement with increased trading activity. To help you find these stocks more easily, another great tool is a stock screener. Stock screening websites like Finviz allow traders to filter all publicly traded stocks based on specific criteria, one of which is float. By setting the float filter, you can quickly identify stocks with limited shares available, making it much easier to spot low-float opportunities in just a few clicks. Using these tools, you can efficiently locate low-float stocks with the potential for big moves, keeping you one step ahead of the next trading opportunity. The explosive nature of low-float stocks comes down to basic economics, supply and demand. When a stock has a low float, there's a small supply of shares available. So if there's a sudden surge in demand, maybe due to positive news, social media hype, or a promising product announcement, the price can soar. This sharp demand against limited availability can drive the stock up fast, sometimes in mere minutes. Think of it like a concert with limited tickets. Imagine if your favorite band released only 1,000 tickets to a massive fanbase. When everyone's trying to buy at once, prices shoot through the roof, with resale prices often multiplying several times. It's similar with low-float stocks. As buyers rush in, they push the price higher and higher because they're competing for a very limited number of shares. But here's the catch. Just as quickly as the price rises, it can fall, often just as fast. When the demand fades, perhaps due to profit-taking, changing sentiment, or new information coming out, sellers start to outnumber buyers. And in a low-float situation, that downward shift can be just as volatile as the upward one. This is where we see dramatic price drops, sometimes wiping out gains within minutes or hours. That's why low-float stocks are a high-stakes game. For those who time it right, there's potential for big returns. But for others, the rapid shifts can be a harsh reminder that high rewards often come with high risks. Alright, let's bring everything together with a real-world example. Imagine we are looking at an early-stage biotech company called Execure Incorporated, which trades under the stock ticker XCR. When we check Yahoo Finance, we can see that this stock has an extremely low float of only 772,000 shares. Now, let's look at the stock's 2024 chart, specifically in September. For most of the month, it was trading at around $2.35 per share due to concerns about a possible delisting from the Nasdaq. But on September 18th, we see a massive spike, with the stock price surging up to $6 per share. So, what exactly happened? With a low float, Execure had a very limited number of shares available to retail investors. Then, after market hours on September 17th, the company announced positive news. It had received an extension to stay listed on the Nasdaq. This announcement became a huge catalyst, sparking bullish sentiment among investors. Suddenly, there was a rush of buyers all competing for these few available shares, and the stock price climbed fast, jumping by 155% in just a single day, from $2.35 to $6. However, as the price climbed, some of those initial buyers, now sitting on big profits, started cashing out. As they sold, the sell volume began to overwhelm the buy volume. The demand that had driven the price up started to fade and the market dynamic completely shifted. Now there was an oversupply of shares and not enough buyers willing to take them. This reversal follows the basic principles of supply and demand. When there's an imbalance, prices shift quickly, and in this case, that meant the stock's gains could vanish almost as fast as they appeared. This example perfectly illustrates both the thrill and the risk of trading low-float stocks, where potential rewards can be high, but the risk of sudden reversals is just as real. As a result, both timing and strategy are critically important. Alright, that wraps up our deep dive into the explosive growth potential of low-float stocks. If you're interested in trading low-float stocks, make sure to do your research, set clear goals, and manage your risks carefully. Understanding what drives these price movements can be a powerful tool in your trading strategy, but always remember the volatility. Thanks for watching, and if you found this video helpful, please like, subscribe, and hit that notification bell so you don't miss out on our next deep dive into the world of investing. See you in the next video. Happy investing!